For most people, buying a house is the largest financial commitment they will ever make. Naturally, they focus on one very specific question: can I afford the monthly payment? It seems like a responsible starting point, but focusing entirely on the monthly math misses the actual scale of what they are buying. When you start touring properties, it is incredibly easy to let emotion dictate your decisions. A larger house feels impressive. An extra bedroom seems useful. You start making choices based on an idealized lifestyle, rather than the function your family actually needs. The immediate result of that emotional arithmetic is that buyers commit to financing, insuring, heating, and cooling extra square footage that they rarely, if ever, actually use. To break out of that trap, we have to stop looking at a property as a static collection of bricks, wood, and a mortgage document. A home is a complex 30-year economic and technological system. Understanding how to manage the inputs, outputs, and maintenance of that system is the difference between achieving financial stability and spending decades under unnecessary financial pressure. This flow model shows two ways to power your system. Paying cash immediately drains massive liquid capital from your reserves, locking your wealth entirely inside the physical property. Taking a mortgage establishes a continuous tether to volatile interest rates, but preserves cash reserves, allowing you to route capital into a growing investment portfolio. Regardless of how you fund the initial purchase, the system requires continuous inputs to operate, and the age of the physical structure dictates the volume of those ongoing costs. Older homes frequently offer lower purchase prices, larger lots, and established neighborhoods, but that initial discount often acts as a mask for a deep sinkhole of deferred maintenance. Over time, the physical structure degrades. Asphalt shingles weather and leak, requiring expensive roof replacements. Aging copper plumbing systems slowly corrode and fail. Eventually, the house will require major internal overhauls. Outdated electrical panels must be modernized to handle today's technology, and aging air conditioning systems lose efficiency before breaking down entirely. This cumulative area chart tracks the true cost of ownership over 30 years. The flat baseline at the bottom represents your initial purchase price. Above it, an expanding colored area represents the compounding snowball of ongoing utilities, mandatory insurance premiums, fluctuating property taxes, and inevitable structural repairs. What becomes clear is that the sticker price on a real estate listing is an illusion. It is merely the entry fee to take on a compounding cycle of operational liabilities. Once you map out those liabilities, you can start identifying the specific variables that allow you to hack the system, stop the financial drain, and create value. This dual-axis chart visualizes a real estate paradox. The physical structure, the red line, is in a constant state of decay and requires continuous money to maintain. But the green line shows the underlying land often appreciates aggressively. Smart buyers optimize for this, analyzing future municipal infrastructure like hospital construction, transit lines, and employment centers. A modest structure in a rapidly developing area consistently outperforms a luxury property in a stagnant market. The next major variable you control is resource consumption. Modernizing how the structure consumes energy is a powerful hack for driving down long-term operating costs. Today, homes are evolving into intelligent ecosystems. By installing high-performance insulation, double-glazed windows, and solar arrays paired with battery storage, you capture your own energy. Predictive maintenance systems can even detect water leaks and electrical faults before they cause expensive damage. By locking in a strategic location and upgrading the energy ecosystem, you change the basic math of the property. You flip the machine from a passive financial drain into an active preserver of wealth. This leaves every buyer with a choice between two very different outcomes. You can view the house as an ongoing, uncontrolled expense, or you can manage it as a highly optimized, appreciating asset. We often assume that the largest or most expensive house on the block is the best investment, but unnecessary size guarantees higher taxes, higher utility bills, and maintenance costs for empty space. A truly smart purchase relies on a ruthless balance. It requires strict affordability, high functional efficiency, and the flexibility to adapt to your life over the next 20 or 30 years. Beyond providing daily shelter, a home operates as the single most important financial engine you will ever manage. Mastering the hidden economics of this system is the definitive strategy for protecting your capital and ensuring long-term financial freedom.